Oh, hi there. My name is Nur Aina Nabilah binti Rosdi, and today I would like to share with you about a topic on investment in bond. Do you know what a bond is about? Or maybe the types of bonds? Or maybe the characteristic of bonds? No worries. My friends and I will explain about this topic in further. So first, let's discover about the definition of bond. A bond is defined as a long-term debt instrument issued by a corporation, either public or private, to finance the company's long-term assets. The issuer or the seller or the borrower of a bond has to make periodic interest payments to the bondholder, who is also known as the buyer or lender, until a maturity stage. The issuer also has to pay the principal payment at maturity. As for the maturity of a bond, it is between 10 to 30 years. The bondholder can claim on the firm's income and assets as specified in the indenture. Do you know what is indenture? An indenture is a contract specifying the requirements of the bond. So, basically bonds are just like IOU. The term IOU is the phonetic spelling of the phrase IOU. In bookkeeping, it signifies as an outstanding debt. In short, buying a bond means you are lending out your money. Bonds are also called as fixed income securities because the cash that is flow from them is fixed.
Hi, my name is Nur Nashwa Akila binti Norizan, and I would like to explain on types of bond for the government bond. So, let's go through one by one. Government bond has two types of bond. One is MGS, are known as Malaysian Government Securities, and another one is GII, are known as Government Investment Issues. So what are GII means? GII known as the Government Investment Issues. The government security issues are based on the Islamic principles and placed on a non-competitive tender. It is a non-interest bearing to enable Bank Islam Malaysia Berhad and other institutions to invest their liquid fund through Islamic basis. The maturity is between 1 to 5 years. And the other examples of government bonds such as Malaysian Saving Bonds and Khazanah Bonds. So the last one is MGS. What are the MGS mean? MGS are known as a Malaysian Government Security. It is an interest-bearing bond that are issued by the government through Bank Negara Malaysia. The government can raise the long-term fund from the domestic capital market to finance her expenditure. The maturity of such bond is 7 years or more than that. The interest is payable semi-annually. MGS also issued by the auctions in the secondary market or Bank Negara Malaysia as well. The price is influenced by Bank Negara Malaysia price lists that have been published monthly, as well as the demand and supply and also the prevailing interest rate. So that's all for me. Thank you.
Hi, my name is Nur Nadira. Let's dive into more the private debt securities. Private debt securities market provides an alternative to bank borrowings. The private debt security market comprises of various types of instruments such as fixed rate, floating rates, zero coupon, convertible or non-convertible, and secured or unsecured bonds. Convertible bonds allow bondholders or investors to have the option of converting the bonds into common or ordinary share of the issuing company at specified times, or to hold the bonds until maturity, and vice versa for the non-convertible. Next is secured bonds. Secured bonds are bonds that are issued on a secured basis. It is secured by the company's specific asset, usually fixed asset, that have a market value higher than the bond issued. Unsecured bonds divided into three types, which is debentures, subordinated debenture, and income bonds. Debenture falls under a type of bond that is not secured by any specific company property. Investors are attracted to such debt instrument because of its strong earning power, since only reputable and creditworthy companies will issue the debentures. Subordinated debenture is also known as junior debt entitling the bondholder to get settlement only after all the senior creditors are paid in the event of the company's liquidation. Due to the nature of such claims, a subordinated debenture has a yield that is higher than the other forms of bond. Lastly is the income bonds. The income bonds have a cumulative dividend features that is limited to no more than 3 years. The interest payment of the bond depends on the sufficient earnings of the company. The last instrument for private debt security is Islamic bonds. The private debt security market also includes issues based on Islamic principle of al-bay bithaman ajil, musyarakah, ijarah, mutarabah, and qardul hasan.
Hello, my name is Husna Akila. Today I'm gonna present to you the features or characteristics of the bonds. First, par value. Par value, or we known as face value or principal value, which is the value or amount that the bondholder will receive on the maturity date. Bond can be sold at par, discounted, and premium. What's the difference between par, discounted, and premium? Par bond usually sold at 1,000 ringgit. Discounted bond usually sold below 1,000 ringgit. And premium bond usually sold above 1,000 ringgit. Second is coupon rate. Coupon rate, or we known as interest rate, that the bondholder will receive during the time between the bond issued until the bond matured. It is expressed as a percentage of the par value of the bond that will be paid out periodically, whether annually, semi-annually, or quarterly. Third is maturity period. Maturity period is the duration of time until the bond issuer make the final repayment of the principal value to the bondholder and terminate the bond. The maturity period of the bond is between 10 years until 30 years. Fourth is claim on asset. As we know, the bondholder will be the first to receive the firm asset or income before the preference stockholder or common stockholder if the firm declare bankruptcy. In the other words, the bondholder have a higher claim on issuing company's asset in the event of bankruptcy. The company must sell or liquidate their asset, and any proceed will go to bondholder before the common stockholder. The last one is voting right and fixed income. The bondholder receive a fixed income in the term of coupon rate on fee schedule, which is biannually, semi-annually, or quarterly. The bondholder has no voting right because bonds does not offer ownership in the company to a return of profit or voting right. The bondholder just lending their money to a company or government for a set period of time.
In conclusion, as the bonds are debt, bondholders are guaranteed a return on their investment and have a higher claim than shareholders. Investing in bonds were a bad decision during 1970s, but it's getting better and better in 1980s and 1990s. You won't get rich with bonds, but they provide a steady stream of income. If it is selected carefully and purchased at the right stage of your life, bonds can help you reach your financial goals.